Markets have been going higher, earnings season's kicked off, and resource stocks expected to pay better dividends than usual. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Paul, let's just kick off. I think it's an exciting time of the year. This is like grand final time for people like you and me with reporting season.
It's grand final time for a number of analysts. It's grand final time for a number of fund managers, particularly those who've been brave or courageous enough to make a couple of calls. And look, I mean, we're seeing good momentum in the US. The question is, can the momentum we've seen with reporting season there, which I think everyone says is going a lot better than expected, can that flow into the Australian market? And, we'll just have to wait and see, I guess.
We've had 2 good days after a number of volatile days, but look, will the calibre of the reporting season determine whether we start heading up or heading down?
When you say we've had 2 good days, I think we're just getting carried up by the US, all right? I mean, early reports haven't been great, so the couple that have come out so far are a bit on the disappointing side. But, again, we'll go back to Friday's market movement. How does the market fall 1.4% on
Freaky Friday it was called.
Freaky Friday. Look, I mean, it's just July was a flat month in the market, and the Australian market has basically travelled sideways since February. In fact, the US has gone up, we've gone sideways. You look at the graph. We need momentum. We need to see some good reports. Maybe, I think, Peter. I think it's probably a little early to call, but...
There's always a glass quarter full.
We're getting carried. The US is powerful. That's what's driving the world stock market. So we're sort of getting caught in that momentum. Okay,
let's talk about earnings season so far, which is pretty short, and what lies ahead.
Yeah, okay, so a couple of big results. Rio later this afternoon.
Yeah, important.
I think a focus. Their productivity numbers weren't so great, but reports that their cash flow's a lot better. Maybe on the dividend, Peter, look, we'll get some sort of extra dividend or special dividend.
That'll excite the market.
That could excite the market. So we've seen also a huge movement up again in iron ore prices in the last few days.
Love the Chinese. They're doing well. Go China.
So, BHP over $26. As I said for a while, I think you've got to play these stocks index weight at the moment. If you can predict what's going on with the Chinese steel market and what's happening in China, you're a lot more than I am ever going to know. So I'm playing those stocks. And that's obviously going to be good for our market, although their production hasn't been brilliant. No. So, let's just see how they go.
A lot of the fund managers believe these resource stocks are going to keep doing well at least to the end of the year. And I know Shaw Stockbroking has a $32 target on BHP. So even if they're only half right, it's still a nice gain. Yeah,
I mean, I think they're not in bargain territory anymore, Peter. And but I think they are price takers. Production is moving up slowly. They've done a lot of work to reduce their costs, which I think is positive. Now it's a question of really what happens to commodity prices, and that will drive their bottom line outcomes. And that's almost sort of toss a coin, I think. I mean, obviously global factors are good. Macroeconomic growth is improving around the globe, but we'll see how they respond. So I think that's why I'm saying I'm not out of them. But I think you need to be sort of marginally index weight on them. Okay,
now the thing that surprised me most of all is that resource stocks are apparently going to be probably paying better dividends than most people expect, and Fortescue is one of the best dividend payers on the market at the moment.
Yeah, Fortescue is one of the best dividend payers.
Who would have thought that?
Who would have thought that? But let's not get sucked into buying resource companies for dividends.
You don't buy mining companies for dividends.
We all learned that lesson. Look, a couple of other things out today. We've seen ResMed with a quarterly report last night. That looks okay. That should be okay for that market.
Good. We've often tipped that. That's good.
Yeah, CYBG, which of course is the old Yorkshire
Clydesdale Bank.
They came out with a quarterly report last night.
Impressive.
Look, it's okay. I think they're sort of basically saying they're on track. Obviously, the Apple report, Peter, last night, which has seen their shares surge by 6% in the aftermarket.
People wanted to hate Apple, and they've come through pretty good.
Almost $160 is where they've closed US dollars in the aftermarket. Now, those shares, Apple, it wasn't so long ago they were in the high 90s, just sort of the last 12 months or so. So, look, that's going to give the US market another big, powerful boost tomorrow. So you've got to say our market's looking set for a pretty good day. And, if Rio sort of can cream that result tonight, it'll be the UK.
Right. Let's go catch you. We'll hit the bell soon.
Yep.
A lot of people care about Telstra.
Yep.
And you've been writing articles about Telstra and Switzer.
I still think Telstra's okay value at these levels. They report the 17th of August. I think at $4, this level, $4.10, a lot of people are going to buy Telstra.
If Andy Penn comes up with a strategy that actually looks positive for the company, could that really help the share price as well?
I think the best thing, best thing for Telstra would be to get its capital in order, cut the dividend down to something that it's manageable, and be able to say with confidence what it thinks it can do in an earnings sense over the next few years, and that would probably help.
Oh, should they just go out there and crush their opposition? They're so big. I reckon they're nice guys. Like, why don't we just go after Optus and Vodafone as like Australians versus the Poms and the Singaporeans?
Yeah, maybe you can drive them home. And remember the others, they're all foreign owned. So if you want to be a little parochial,
jingoistic.
Jingoistic, Telstra, right?
Well, Paul, as always, a great view on Telstra. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.